We're starting the week seeing the biggest one-day rise for oil in more than 25 years following the attacks on a crucial oil-producing plant in Saudi Arabia over the weekend. But what does this mean for the days ahead for the oil price? Hello, I'm David Jones from Capital.com, and I thought we'd do a quick video because we've seen such a sharp start to the week for oil, particularly Brent crude oil having its biggest one-day move since 1991. Of course, that was back when the Gulf War was starting. But what we're seeing following the attack over the weekend on a critical oil-producing plant, responsible for something like 5% of world oil production, that's why we've seen such a knee-jerk reaction by oil markets when they opened on Sunday night in Asia trading. So I'm going to talk a bit more about what's been happening in a few minutes' time. We'll look at the really big levels to watch if you're trading oil in the days ahead. But before we do that, let's just take a very quick look at the market reaction, how it opened on Sunday, how traders reacted, and what this could mean for the rest of the week. Let's take a quick look at the reaction from the markets on Sunday night when oil opened. So this is Brent crude we're looking at here. I've got a daily chart. So you can see on Friday it closed $59.47. Let's jump forward to Sunday night. And there's the gap open. Clearly the market has had some news over the weekend. It can't react to it until the market opens. So the market opened, it started trading about $66.60 on Sunday night. So a move in excess of 10% from where we saw it close on Friday. I think there's a couple of ways of playing this. You know, the aggressive trade here is to be a seller, or would have been maybe to be a seller, you know, assuming the market is overreacting. Perhaps the more patient trade, watch how it performs this week. You know, do we see it drift off slightly and then maybe some buying coming in? Let's just flip this over to a shorter term chart. So you can see the gap open here trades up above 66 for about 20 minutes, half an hour, and then starts drifting off. You know, lost a couple of dollars by 7 o'clock in the morning UK time. So I think this is going to be a test for this week. You know, are we going to see actually buyers coming back in now? That initial move looks like an overreaction, but do we see buyers coming down? So some really big levels to watch that I'm going to talk about in a second. So this attack involved a critical oil producing plant run by Aramco, the Saudi Arabian state oil company. This plant on its own is responsible for something like 5% of the world's oil supply, so it's not so surprising that we've seen the price of oil jump so sharply on Sunday night. When it comes to who's responsible, the US says they have intelligence putting the blame firmly with Iran, whilst Iran is blaming rebels. But of course, traders were more concerned with what the price was doing, which is why we saw that big move in Brent crude when trading started. US crude oil moved as well, but not quite as far in percentage terms as the UK version. Reaction by governments has been pretty swift. We've seen President Trump authorize the release of US oil reserves to try and ensure that there is no sort of hit to supply for the oil market. On top of that, Saudi Arabia is also expected to release its oil reserves. Events to watch this week. Clearly on Wednesday we have the weekly oil inventories, Wednesday afternoon. These are likely to be even more closely watched than usual, just to see just how much oil the US has in reserve, and also of course how quick Saudi Arabia can get these oil plants back online. If we saw a quick resolution there, you'd expect the oil price to return to normal fairly swiftly, but any indecision, you know, markets hate indecision, we could well see further volatility for the price of oil. Let's look at the big levels to watch. I'm going to focus on Brent crude here, so the big levels to watch if you're trading this in the days ahead. So on the upside for resistance levels, we've got a couple of longer term levels up there, psychological levels as well, but I think the immediate one to watch is that high hit on Sunday night, so about $67.50 a barrel. We did see the price back off from that fairly quickly, but let's see what happens. You know, if we do see buyers come back in, does that continue to be a ceiling for a price? I think for short-term traders, that's a really big resistance level to watch. When it comes to the downside, you know, because it was a big gap, we're a long way away, relatively speaking, from other short-term levels. But I think the first one to watch, the highs from last week, they were around $63 a barrel. Maybe we'll see this old resistance become support. So again, if we see a bit more weakness from here, a bit more pressure on the oil price from that gap open on Sunday, watch how it performs around 60. It's going to be a really interesting market to watch this week. And clearly the question is, has the market overreacted? You know, initially in overnight trading, we are seeing that the case, with it moving away from where it gapped open. But maybe traders will see this as a second bite of the cherry, a chance to buy in. So watch to see where we see any buying come in. If we see any more dramatic moves in oil, we'll do a further video later this week. But keep an eye on those oil inventories due out Wednesday afternoon from the US. That's it for our quick update for the oil price. As usual, to never miss out on our content, make sure you're subscribed to the channel and click the alarm bell notification down there to get automatically notified by YouTube whenever we upload new content. But we'll wrap things up there. So from me, David Jones, and Capital.com, good luck with your trading.